TikTok's uncertain future, a deadline extended. The clock is ticking, but TikTok lives to dance another day. President Trump has once again extended the deadline for ByteDance, TikTok's Chinese parent company, to sell its U.S. operations. This reprieve, a 75-day extension, pushes the deadline to mid-June. This is the second time Trump has delayed a forced sale, leaving TikTok's fate in a precarious limbo. The original deadline, set for late April, loomed over ByteDance, as pressure mounted from both the U.S. government and potential buyers. The extension, while offering a temporary reprieve, highlights the complex geopolitical tug-of-war surrounding the popular video-sharing app. TikTok, known for its viral dance crazes and lip-sync battles, has become a surprising flashpoint in the escalating tensions between the U.S. and China. The app boasts over 100 million users in the U.S. alone, making it a cultural phenomenon and a valuable asset in the digital landscape. This delay is not entirely unexpected. The original deal, painstakingly negotiated, hit a major roadblock: China. Beijing's objections, voiced loud and clear, have thrown a wrench into the proposed sale. The deal involved spinning off TikTok's U.S. operations into a new entity, majority owned by American investors. ByteDance's stake would be reduced to less than 20%, a bitter pill for the Chinese tech giant. The stakes are high for all parties involved. The outcome of the TikTok saga has implications that extend far beyond the fate of a single app. It speaks to the broader struggle for dominance in technology, the growing distrust between the world's two largest economies, and the increasingly blurred lines between business and geopolitics. China isn't staying silent. The Chinese government, angered by recent U.S. tariff hikes, has made its displeasure known. These tariffs, increased by President Trump, have added fuel to the already simmering trade war between the two nations. The timing of China's objections to the TikTok sale is no coincidence. The tariff increase, a hefty 34% hike on a range of Chinese goods, brings the total tariff rate to a staggering 54%. This move, widely seen as retaliation for China's stance on the TikTok deal, has further escalated tensions. President Trump, however, has hinted at the possibility of easing these tariffs if China were to greenlight the TikTok sale. China, for its part, has been vocal in its opposition to what it perceives as U.S. bullying. The Chinese embassy in Washington issued a statement emphasizing the need to respect the rights of businesses and condemning actions that disrupt market principles. The message is clear. China sees the forced sale of TikTok as an attack on its economic interests and a dangerous precedent. This economic tit-for-tat has raised concerns about a full-blown trade war. The uncertainty surrounding TikTok is just one symptom of the deteriorating relationship between the U.S. and China. Both sides seem entrenched in their positions, leaving businesses and consumers caught in the crossfire. Despite the uncertainty, interest in TikTok remains high. A bevy of potential buyers, from tech giants to private equity firms, are circling the app, eager to get their hands on its massive user base and cultural clout. President Trump himself has claimed to be in contact with 4 different groups vying for TikTok. Among the most prominent suitors is a consortium led by Oracle, a software giant, and AppLovin, a mobile gaming company. This group, with the backing of several private equity firms, has emerged as a frontrunner in the race for TikTok. Their bid, reportedly valued at tens of billions of dollars, highlights the app's immense financial potential. Another heavyweight contender is Amazon. The e-commerce behemoth, known for its aggressive expansion into new markets, sees TikTok as a potential goldmine for advertising revenue and user data. Amazon's interest in TikTok underscores the app's strategic importance in the evolving digital landscape. Joining the fray is a consortium of private equity firms including Andreessen Horowitz and Blackstone. These financial powerhouses, with deep pockets and a history of lucrative investments, are betting on TikTok's long-term growth potential. Their involvement underscores the high stakes involved in the battle for TikTok's future. The U.S. government's push for a TikTok sale stems from deep-seated national security concerns. The app's massive user base and its Chinese ownership have raised alarm bells in Washington, with lawmakers on both sides of the aisle expressing fears about potential data security risks and Chinese government influence. At the heart of the matter is the data TikTok collects. The app gathers vast amounts of information on its users, including their location, browsing history, and even their biometric data. U.S. officials fear that this data could be accessed by the Chinese government and used for nefarious purposes, such as espionage or the spread of propaganda. Adding to the concerns is a 2024 law signed by then-President Biden that mandates the divestiture or ban of any foreign-owned social media company deemed a national security threat. This law, passed with bipartisan support, reflects the growing anxieties in Washington about the influence of foreign tech companies, particularly those based in China. The TikTok saga highlights the challenges of navigating the complex intersection of technology, national security, and geopolitics in the 21st century. The app's fate hangs in the balance, a stark reminder of the delicate dance between economic interests and national security concerns.